Navigating the stock market can feel like a maze, but fear not. In this beginner's survival guide, we'll demystify the concepts of stocks so that you can take your first steps in taking control of your personal finances. A stock is simply speaking a share of a company. When buying a stock in a company, you're actually buying a piece of that company. That makes you a shareholder. Not all companies have shareholders. Some are owned by just one person or several persons together, or are even owned by another company, for example. But now we were talking about stock companies. What stocks can you buy? In theory, you could buy any stock, but not all stock companies are listed on a stock exchange or a trading platform. If a share is not listed on a stock exchange or a trading platform, you, the buyer and the seller, have to make the deal yourselves between you. That means that you first have to find each other and then negotiate the size and a price between you. Kind of complicated, and luckily you don't have to that, since there are so many interesting stocks that are listed on different stock exchanges. Let's instead focus on stocks that are listed and that you can find on a trading platform. If, for example, the company called Fresh and Juicy is a stock company with 100 issued shares, there are 100 stocks of that company that could be bought and sold. So if you buy one of these stocks, you now own 1/100 part of the company, Fresh and Juicy. Congratulations! That stock of yours comes with certain rights, such as the right to vote on certain company decisions and to receive a portion of the company's profit in the form of dividends. Nice! So, you bought that stock in Fresh and Juicy, but now what? You probably bought that share because you wanted to make some money, right? Let's say that more and more investors hear about what a great company Fresh and Juicy is to invest in, with a bright future ahead. Maybe they have amazing recipes for the most delicious juices and make jaw-dropping profits. Maybe the company grow a lot and their juices now can be found like everywhere. Some of these investors probably want to get hold of some of the shares too. So, when demand of the shares starts to rise, so does the price, and you can now sell your share with a profit. Yeehaw! But be aware, the stock market isn't all confetti and cotton candy. Your share can also take a dip. Maybe the competition is just too hard to beat for Fresh and Juicy to beat. Or maybe bad weather causes the prices of their key ingredients to skyrocket and their profit to go up in smoke. Many things can be the cause of why companies don't perform well, and when more and more investors don't believe in a company's future, they are not that willing to pay a lot to invest in the stock anymore, and so the price drop. And now if you want to sell your stock, you might have to sell it with a loss. So, how should you know what stock to buy and what not to buy? Well, that's a whole other story for another video, but let me tell you these 3 things. Know what you're buying. Do your homework and stay informed about the companies you invest in. Next, diversify your investments. Don't put all your eggs in one basket. Diversifying your investments is not just a good strategy, it's a must. And remember, it's a marathon, not a sprint. Investing isn't something you can rush. Now go forth with confidence and make your money work for you.